Hi again, everybody. Welcome back to Markets on the Move. I'm Marlin Bohling, your host, and I'm talking with Oliver Sloup of Blue Line Futures to wrap up the week. And on a Friday, wow, what a surprise. Look at them go on the ag commodity trade, Oliver. Grain and livestock, everything looked like it was really flying high the end of the week. What was going on with that anyway? What took the spurs to them?
Yeah, a lot of green on the screen, which is arguably a lot better than where we were kind of in the first half of the week. We'll start with the grain specifically, and the fact that corn was able to battle back after Tuesday's WASDE report was very, very encouraging. And when you and I talked on Wednesday, we talked about kind of a bit of a fundamental rejection when you had the big yield come out with additional acres being thrown on, and we weren't really able to accelerate below last week's lows. That's kind of the fundamental rejection that we're looking for when trying to carve out a near-term low. So we were able to rally in the last several sessions, back to basically unchanged on the week. That is a huge victory, but the bulls still have a little bit of work to be done. I'll pull up the December corn chart here if I can, and we'll take a look at that. We'll be looking at our Blue Line Edge trading platform, desktop and mobile, very user-friendly. And a lot of great tools for technical analysis. December corn, we're almost back to the scene of the crime, or those old lows from the middle part of July and the breakdown point from August 1st. And that comes in near 408 to 411. We stopped just shy of that in today's trade, but that's going to be the big pivot pocket to kind of keep an eye on into next week's trade. If we're able to achieve consecutive closes out above there, potentially that spurs some additional upward momentum through next week. Now, next week, not a whole lot of new news from the USDA, but we'll be putting out a lot of new news each and every day on that crop tour. So we're looking forward to it.
That purple line on that chart, what is that?
The purple line is the 20-day moving average, and you and I have talked about the 20-day moving average being really very important, not just for the corn market, but it seems like a lot of commodities really throughout this week's trade, or this year's trade, almost acting as a trend line, in some instances support, and in some as resistance. So that coincides with that kind of pivot pocket that we're looking at. If we can get out above there, maybe you make a run towards this red line, which is the 50-day moving average, and a more important trend line resistance point that really comes into play since April 1st. So got some hurdles to get over for the corn market, but all in all, it was a really constructive week considering the bearish headline news that we got.
So we had some gains in the grain markets today, especially we're talking right now about the corn. But are the grain elevators locally absorbing some of that? Or are they widening out the basis or not these days?
Yeah, the basis is fairly firm in some areas. It'll be interesting to see, how that continues to play out in the harvest, especially, just talking with a lot of people. It seems like a lot of folks are quite undersold, so it'll be interesting to see how that cash market continues to develop. But futures and technically speaking, this market looks constructive, and arguably more constructive than the corn chart here is the soybean chart, and a little bit different of a fundamental picture too. This week we got a fundamental catalyst to kind of change the narrative. Coming into this week, there wasn't a huge reason for the soybean market to rally, but a reduction in 2 million acres is certainly a story worth talking about, and that gave us kind of a technical story to talk about as well. We got out above trendline resistance, above those that cluster of major moving averages, and we defended that yesterday and today. So if you're looking for more of a constructive chart, soybeans are certainly probably the one that stole the show in this week's trade.
But are we getting overbought, especially heading into harvest?
That's the big question. I would say with the fundamental shift that we've seen, I don't know that we're overbought yet. We do have the RSI pulled up here. It is at 60, which is still below what's considered overbought. Typically, technicians look for anything with a reading above 70 as officially overbought condition. So we are working our way into that territory. Not quite there yet. I wouldn't be surprised to see this week's move maybe be a little bit more sustainable into next week's trade and potentially get back towards the upper end of the range near the 1070s. I think if we can tack on 20, 25 cents from here, producers should maybe be looking at being a little bit more proactive in protecting the downside. August, obviously a very important time of year, so we do have that working in our favor right now, where there's still some degree of uncertainty about what we're going to be able to produce, and potentially that keeps the premium in the market. I think the thing that would maybe neutralize my optimistic outlook right now is a break below that cluster of major moving averages and today's low, really. So that's in the mid 1020s. As long as we can defend that, I think we look pretty good going into next week's trade.
Well, I know it's kind of a tall order, but are we going to finally breathe some signs of life into the wheat market? Can it bounce from here or not?
I would like to think that the wheat market can find some legs at some point. I think if corn and soybeans were able to continue their rally in the next week trade, that could potentially spill over into the wheat market and be a tailwind there. But it has just been a dismal market. And it's one of those markets where if you want to take a stab at the long side right here, you are fighting a pretty significant downtrend. So it is a counter trend trade and counter seasonal trade as well. So when you talk about going kind of against the grain, I like looking at the option strategies. That way it limits your risk ahead of time, so you know what worst case scenario is, and you still get that exposure, and you're not going to lose a whole lot of sleep at night. We do have a meeting later this afternoon. President Trump and Putin will be talking. Potentially something comes from there that could maybe shake the trees a little bit in that wheat market.
Well, when we talk about the livestock trade, I know it's a bad pun, but some traders are looking at that cattle market going, holy cow, what was that all about? So let's talk about these lofty levels. I mean, it's like they're just clinging to the rafters here.
Yeah, lofty levels is right, and the volatility continues to be very, very high. Mid-morning, we had Secretary Rollins and Governor Abbott talk about screwworm in Texas and how they're going to combat that. She touched on the five-prong approach that they have in place right now, and even expanding on that with some new facilities coming online for the sterile flies to combat that. I think they were going to try to do 300 million flies each week for production, which is about 3 times what they're doing right now. So some potential signs coming down the pipeline that could maybe pave a path for reopening. No real sign of that yet, but I think a path of reopening in the distant future is certainly something to keep an eye on. And I think really looking at the futures prices, you can see that in the feeder cattle market. Front months sharply higher today, and at some points those deferreds were lower across the board. So I think you're pricing in some price reversion in that back end, and it'll be something to keep a close eye on. Obviously, a lot of moving parts. The thing that's really caught my eye in this cattle complex is the average true range, and we've got that pulled up here on the orange line down here. So for October live cattle, the 14-day average daily trading range is about $4.50, and if you jump over here to feeder cattle, the average daily range, we're talking $6.80. Those are massive, massive moves. So I've been telling guys, if you can't handle that type of volatility, you need to rethink your position sizing, or look at the options market to hedge your futures, or just take an outright position using options.
I was looking at a minute-by-minute chart earlier before the close, and my goodness, it was right around 12 o'clock noon Central Time. They just made a massive jump, just several dollars worth within a span of about 5 minutes there.
And that was on the back of that press conference that was ongoing. It was supposed to start at 11:30. It started a little bit later. So as that press conference started unfolding and developing, you saw traders kind of jump on board with anything that they could get their hands on, whether it be bullish or bearish. Obviously, it ended up being a bullish day for cattle. I think the main takeaway from the press conference was they're taking the right steps, but the pathway to reopening still isn't really defined. And so you could make the case that today's announcement was somewhat of a nothing burger. So no new news. It's not bearish news. So in this environment, it's bullish news, and we got a nice swift move to the upside to round out the week.
I think there was a little fear that maybe they were going to open up the imports from Mexico, saying they had it under control or something, but that didn't happen. I don't know if that's still going to be a threat down the road or not.
Yeah, I think that some of the fear in Thursday's trade, where we just saw some long liquidation and some profit taking ahead of today's meeting. I don't know that anyone necessarily thought that they were going to open the border, right on the bat here today. But I think it was more so looking forward to the pathway of reopening the border. And again, we got some good news on how they're going to continue to combat that, but no real definitive timeline, which again added some fuel to the bull story for now.
And again, lean hogs seem to be content just watching the world go by.
Yes, as we've been talking about the October lean hogs, we kind of broke down below the 20 and 50-day moving average last time we talked earlier in the week. We're still contained within those, and then on Thursday we broke below the 20-day, which opened the door for some trend line support here. All in all, again, I think this is mostly a range-bound market. If I had to take a position, it would probably be selling rallies, as we are starting to carve out lower highs and lower lows in a seasonally weaker time of year. But as you had mentioned, it just seems like a lot of these lean hog traders are just kind of eating their popcorn, watching that cattle market go berserko every single day.
But if you look at that chart that you have on the screen right now, I mean, that's a pretty intense coil pattern that we're really winding up into right now.
Yeah, I'll draw the trend line up here. So yeah, you can see that we're marking lower highs here recently, but we're also marking higher lows. So we are, if you're looking at that from a technician's standpoint, you're looking for a breakout below or above. We're basically building up energy for a bigger directional move. We're not quite there yet. I think we probably continue to consolidate until we get towards the end of that pennant there. And we'll go one way or the other. Which way, to be determined. As mentioned, though, I can probably lean in on the short side here in the near term.
Well, with the Trump and Putin meeting going on in Alaska as we wrap up this week, what did the outside markets do? Are they just kind of biding their time or what?
Yeah, the outside markets were actually relatively quiet. Looking at the S&P and the NASDAQ, a little bit softer, mostly throughout the day, but not anything significant. I think the NASDAQ was down about 0.5%, S&P kind of back and forth on unchanged. I think a lot of the world is just kind of waiting to see what comes of this meeting, if anything. Crude oil, good outside market that we touched on earlier in the week, was able to find its footing yesterday, but again, today just kind of reverting back and giving back yesterday's gain. So we talked about this 62 area being very, very important for crude oil. And this was kind of where we started to accelerate in April. That became resistance for much of the spring. And then the breakout point from June, that has now become support. So $60 to $62 in that September crude oil contract going to be very, very important to defend. A break and close below there, and you can obviously see there's a little bit of air on the chart. So that could hinge on what comes of this meeting between Trump and Putin.
Well, next week is the Midwest Crop Tour. You are going to be on that. I think one or two of you are. Tell us about your time schedule for that.
A lot of people are like, oh, wow, that sounds like fun. But it is the busiest week of the year because we put on about 2,000 miles across 5 different states. We start off in Ohio, go through Indiana, Illinois, Iowa, and then up to Minnesota. And through the course of that journey, we're stopping every 15 to 20 miles, checking out random fields, along with doing our normal day-to-day work. And then when we do check into the hotel, we've got nightly meetings. So it's going to be a busy week, but it'll be fun to get out there and see how things are looking for ourselves. And as we go along that route in each stop, we'll be posting live updates on our portal. You can find that at bluelinefutures.com and get signed up for access to that. And be putting out a lot of great content from what we find out there. So yeah, it'll be a busy week, but it'll be a good one.
So when do you head out?
We are leaving Sunday mid-morning. We all meet in Ohio just outside of Columbus, and then we'll hit the road probably dark and early first thing Monday morning. So we're at that first field by the first light.
Do you put comments on Twitter as well, or I guess X they call it now?
Yep, we'll be posting on Twitter, on Facebook, and again, directly to that portal on bluelinefutures.com. So there's a special portal devoted to the crop tour that we'll be posting a lot of updates on. So really looking forward to getting out that information and sharing what we're seeing with everybody.
And when do they come up with their grand total? Is that Thursday, if I remember right?
Thursday is the last day, and then Friday is, I think, the big announcement of their final estimate.
Okay, the big reveal. All right, well, we look forward to that and rest up this weekend. Look forward to hearing what you have to report from the field next week. We're talking with Oliver Sloup, and that'll do it for this particular report. Appreciate you joining us. I hope you have a good weekend. Until next time, I'm Marlin Bohling, and you have a good one.
Hi, I'm Oliver Sloup, co-founder and vice president of Blue Line Futures. Join me for the 2025 Pro Farmer Crop Tour live from the heart of the Corn Belt. This year's Pro Farmer Crop Tour runs from August 18th to the 21st, and I'll be boots on the ground covering the eastern leg. I'll still be delivering my regular daily grain market commentary, but this time with a twist. Exclusive real-time updates from crop conditions to yield potential. You'll get my first-hand insights straight from the fields. Sign up now for our exclusive content, including on-the-go videos and in-depth findings you won't find anywhere else.